Good morning, traders. It's 8:02 a.m. on Wednesday, November 30th, 2016. Thanks for joining me. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The news is dominated by crude oil this evening. In case you missed it, crude oil is trading at 48.80. Just as a comparison, yesterday it closed at around 45.27. This is a January contract, so it's up $3.58. Believe it or not, up 8%, 8% since yesterday's close. Yesterday was it actually did what I talked about in yesterday's Trader Bite, which is to drop and then form a balance below before the next move, as news was coming out today. So that's the dominant factor right now. We got a few things. API inventories came out yesterday, slightly better for crude, negative 0.7 million barrels versus negative 1.3 expected. This is a second consecutive draw, and then, of course, we got the ADP employment change was expected at 170,000 and came in 216,000, much stronger. The prior was revised lower from 147,000 to 119,000. So this is a sort of a precursor for non-farm payrolls and unemployment this Friday. So that's something we will take in with us. The news feed, the news flow from oil has been consistent, expected to continue to be consistent today. We had comments from the Iranian oil minister at 2:37 a.m. Chicago time, saying they're close to a deal. Then at 3:16 a.m. Chicago time, the Saudi energy minister says good chances of an OPEC agreement with a 32.5 million barrel per day ceiling, still the main focus. And then we got at 7:18, we got news that OPEC agrees to cut output by 1.2 million barrels. That's all they're cutting is 1.2 million barrels per day to 32.5, in line with the Algiers agreement. And so it's just been this constant thing that's in the background. Iraq reportedly agrees to freeze but not cut from 4.5 million. Now remember, the production is still very high by historic standards at 32.5 million. It's still very high. They've been pumping like crazy to cover the holes in their budget because of the lower price. So this is a news-driven event here. And clearly the market is responding strongly. Crude is now up 8.11%, at $3, up $3.68, trading at 48.90, continuing to push higher. As far as what we're expecting for today, looking ahead, we did get PCE core and some other numbers. You can look those up. Personal income, personal spending. We're getting U.S. Chicago PMI at 8:45 Eastern, 8:45 Central, 9:45 Eastern. This number comes out early to subscribers. Usually comes out at about 9:41 to 9:42 a.m. and then officially released at 9:45. So subscribers get it early. You will likely see a reaction. So if you're in a position and you don't have enough cover, if you're day trading, you'll probably want to stand by at about 9:40 and wait for that to come through. I usually get the rumor before the release. I'll try to post it. The expectation is 52.5 for November, 52.5. And then at 10 o'clock, we get pending home sales, expecting 0%. And then at 10:30, of course, we get the crude oil inventories, expecting 400,000 barrels. Again, API came in at negative 0.7 million. Distillate inventories expecting plus 1.5 million. Gasoline inventories expecting 1.25 million. So that's what's driving. Those are the numbers that are likely to drive the rest of the session. Oil remains in the forefront. We're getting a lot of central bank talk and information. The BOE published its financial stability report this morning on the European Open. ECB Speaker Hansen already spoke at a conference at 4 a.m. Eastern. Draghi, ECB's president, Draghi spoke at 7:45 Eastern this morning. We get Fed Speaker Kaplan about an hour ago, and then going forward, we're looking for Fed Speaker Powell at 11:45 Eastern. We're looking for Fed Speaker Mester at 12:35 Eastern, speaking about the economic outlook and monetary policy. So those comments are likely to hit the wires and potentially make a difference. And then at 2 o'clock, we get the U.S. Federal Reserve beige book, which has caused some moves in the past. So that's what's on deck here. As far as what we expected yesterday versus what we got, just a quick review. The primary hypothesis yesterday is to open and chop, test higher, and sell below Monday's low into the next set of days, the next two the next two balance days. And then the secondary hypothesis was to do the same, just chop around on the open, two-way chop. Expected wide rotations on the open, test lower, and then come back in and balance back into the lower end of the 2-day balance, 3-day balance, or 4-day balance, I guess. And then the third hypothesis was to test lower, test the prior day's low, and then rotate up and then start moving towards the higher end, and then that's in line. That would be in line with the trend as it has been with the way the market's been trading, which is to just buy every dip. It's the market's got a lot of confidence in the buy side, and it continued yesterday. The reason this was the tertiary or the third hypothesis as opposed to the first or the second is the prior day's neutral extreme close, testing both sides of the IB, and then testing up, and then finishing down is usually considered pretty bearish. So that's why the bearish outlook. I have to follow what the auction the nature of the auction usually does, and so that's how I stack these hypotheses. However, once it started to push through the 2205.50 and back up, it was clear that Hypo 3 was in control here. Once we went up, we made a double top at the IB high, which has a decent probability of breaking upwards, and that played out. This is considered the double IB high stat, and the probabilities favor that this when the market creates an IB and retouches it, it favors the IB being broken before the end of the session, and that worked out. And then what we did is we put in a high at 2209.50. 2209.50 is in line with the prior day's high. So what we have is a double top on the daily. On a daily basis, we have a double top. So the expectation yesterday is that we are likely to drift and take that double top out and start attacking the weekly high and the all-time high, which is 2211.75 put in last Friday. It's already doing that. It's the overnight high was put in at 2213.75, moved up with the crude oil news here just now. There's a spike right here on the crude news, and you can see here the market reopened, tested lower, unable to find more sellers, and buyers step in and push it back up and through to the other side of to the high side of yesterday, and now we're breaking through, and this is just a very bullish formation that we have here. We're likely to open just slightly out of range if we stay in this area. So the overall expectation, and just as a segue, here's my crude oil chart. So you can see that we dropped yesterday, and what I talked about is the potential for a balanced profile down below in crude on this gap down. And it was completely, yesterday's crude trade was completely choppy, was completely balanced, compressing. It did not create a neutral profile, a neutral day type, which is what I expected. However, it did compress quite a bit. Volume was on the lightish side, of course, in anticipation of this news. And then this morning, if you look at where we are, you'll see that we're quite a ways away, and we're at highs for the month on crude. We've been higher recently in October, but this is where we're trading right now versus where we were trading yesterday, and that's the effect of news. So that's the I'm keeping a very close eye on news. It sits on the side here, and it's something that is influencing products across the board right now. As far as what I'm expecting for today, we are against all-time highs. I'm expecting it to open in an open auction out of range, test down into the 2209 area, 2208.50, find a base, and then start to move up. I don't expect it to push very far. I expect it to be a choppy day with an upward skew as the primary hypothesis as we squeeze into new highs. So I'm not expecting it to be an open drive push. Again, we are at all-time highs. It's hard to see how it could be driving at these prices, but it could do that. I'm open to that. The most likely scenario. Folks are in trouble, sounds like. The most likely scenario is for it to pull back and then squeeze up as soon as it starts to pull back. Remember, the market advertises lower prices to stimulate buying. The market advertises higher prices to stimulate selling until it finds the opposing force and it balances. The market's nature is to balance. So that's hypo 1. Hypo 2 is a strong open higher, test the overnight high, rotate back down, and then finish somewhere in the middle. That's hypo 2. Hypo 3 is a look at a bigger dip down. Again, seeing signs of the market running out of steam at these prices. Again, I'm going to follow the trend, and the channel is an upwards pointing channel. You cannot deny that. So any rotation down is likely to be bought, and that's why this is a likely scenario. This comes in as scenario number 2. The third scenario is to push much lower and then come back into line and hold these prices inside of this 2-day or 4-day MC. Not likely. The most likely scenario is hypo 1. And again, once I include yesterday, you could see how this volume's starting to fill in up top. So we're getting a lot of energy on the high side of this profile. In the last 4 days, what we have is a box profile. So what this is saying is that the market does not have clear consensus and is distributing its energy across multiple prices. It is not finding the opposing force yet. It's not finding clear sellers yet. So again, those are your 3 hypotheses. Hopefully that's setting you with some sort of an idea for the day and getting you going on what to expect. Good luck, and I will catch you tomorrow. A final reminder, please hit the like button on your way out. Please subscribe to the channel, to this channel, if you are looking to be notified every time it's created, as opposed to waiting for the Twitter notice. But do hit like, do hit subscribe when you can, and also There will be a webinar on order flow on Tuesday. We'll go over several setups using order flow, scalpish type setups, and looking at what is the latest as far as the tools I'm using and the approach I'm taking at scalping. Good luck, and I'll catch you tomorrow morning. Take care.